Hi, and welcome to Market Conversations. Just want to do a quick video on First Republic Bank. But before I continue, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. It looks like we are down 6% today. And it has been down quite a bit in the last 2 weeks. We can see that it was once above 120 and then hit a low of 1152. This was the other day. So we did have some good news today. So we take a look at that. It says Janet Yellen clarifies Treasury stance on bank deposits insurance amidst market turbulence. That regulators are prepared to take additional steps to protect customer bank deposits if necessary. This is in contrast to her remarks a day earlier to the Senate Appropriations Subcommittee when she said regulators were not looking at blanket protection for banking deposits. Yellen's new comments on Thursday were reflective of Federal Reserve Chair Jerome Powell's comments made on Wednesday, where he indicated that regulators are prepared to take additional action should an individual bank failure threaten to provoke a wider contagion of bank runs. Yellen's statements came amidst the collapse of multiple U.S. regional lenders this month, with investors pushing the stock prices of once highly regarded regional bank stocks to around multi-year lows. She also clarified on Thursday that Treasury officials had not examined the possibility of expanding federal insurance temporarily to all U.S. deposits without congressional approval. So this is good news for regional bank such as First Republic Bank. And I do think that we are just consolidating right now before it continues to move higher. But again, this is an extremely volatile stock. We've seen two stocks that have been shut down and halted. That is Signature Bank and Silicon Valley Bank, which I actually got in the day when they halted. So I'm down $6,000 on that. I'll probably never see that money again. But with First Republic Bank, they still haven't halted. They haven't done a offering yet, so it could still happen. So just be aware of that. There's an article on 4 reasons to buy. So it says here as a summary, the sharp decline in the regional banking sector presents a prime opportunity to buy regional bank shares cheaply, but only for investors who can handle the strong price volatility. I don't think many depositors will take money out of the bank due to the extra liquidity boost. FactSet provides insight into the risk exposure of 10 regional banks. First, we will clean out strong from this analysis. JP Morgan came out with an analysis that showed us the dramatic results of SVB's financial CET1 capital ratio. The CET1 capital ratio for First Republic is expected to be strong at 6%. First Republic's risk management is favorable because the bank does not invest in exotic derivatives, does not invest in junk bonds, does not issue credit cards or auto loans, and has no negative repayment loans. I think the reward here is much higher than the risk, but you definitely have to risk what you can afford to lose. So right now it's trading at $12.53. If you buy 100 shares, that's $1,250. And let's say it goes back up to at least 40, which it has done in the last week or so. So right there, you already made $3,000. And if it does go to zero, you're just risking $1,200 to make possible $3,000. Let's take a look at the options chain. So we can see that implied volatility is extremely high, meaning that puts and calls are going to be inflated. So in this case, you want to be selling options, but then selling options, you don't get that much premium. So the only thing I can think of is just buying shares and just hold on to it. At least that way, there's no expiration date. And the only thing that you can lose is what you put in. So we take a look at some of these options, just in case you want to get into these options. So for tomorrow's expiration, you see that there's 10,000 volume for the 1250 strike. That's on the put side. And then we have a lot of volume on the call side. The 16 strike is pretty popular, but the IV is extremely high, meaning they're going to lose a lot of money if the stock doesn't move in their favor. So best thing you do if you're wanting to get into options, try to pick an expiration date that's further out. So let's say May, but even then it's extremely expensive. So for a 1250 put, it's $500. For a 14 call is $500. you might as well just get some shares with that money. Just be careful, be patient, and just wait and see. If they do announce an offering, which is really bad, this can easily go down $8, $7, $5 even. So just be careful and invest what you can lose. And thanks for watching.